All right, let's jump right into it. Today on Talk Tickers, we're digging into Workiva's latest earnings, their Q3 2025 report. And let me tell you, this one was a big deal, coming at a really pivotal moment for the company.
So yeah, this wasn't your run-of-the-mill quarterly update. You had an activist investor, Irina Capital, breathing down management's neck, pushing for some big changes. It was a real pressure cooker situation. And this quote? It really nails it. Workiva didn't just meet expectations, they absolutely delivered.
Okay, so let's get into the nitty-gritty, the numbers. And wow, they were strong. I mean, strong across the board. The market definitely noticed too. The stock just shot up over 13% after the announcement. The big headline here, the number that really jumped off the page, was the bottom line. Workiva didn't just beat earnings expectations, they completely crushed them. We're talking 55 cents per share when the street was only looking for 39. That's a huge beat, and it's a massive signal that their operating leverage is really starting to kick into high gear. And it's not just about earnings. The overall health of the business, it looks fantastic. Just look at their annual recurring revenue, or ARR. For any software as a service company, this is the metric you watch, and it actually accelerated to 22.5% growth. That tells you the core subscription business has some serious momentum.
But here's what really caught my eye. The explosion in big-time contracts. I mean, a 42% jump in customers paying them over $500,000 a year, that's huge. It proves that Workiva isn't just a small niche tool anymore. They're landing the big fish, winning major deals in the enterprise world.
And this table just lays it all out, right? It really paints the full picture. This wasn't a one-trick pony quarter. You've got the revenue beat on the top line, a massive, and I mean massive 860 basis point jump in operating margin, and check this out, free cash flow margin literally doubled. On top of all that, customer retention is climbing. It was a total clean sweep. So the big question is, how did they do it, right? What's the story behind these numbers? Well, management is laying out a pretty compelling narrative, and it really boils down to three core pillars.
First up, it's all about positioning. The CEO, Julie Iskow, is making it crystal clear. They want Workiva to be the one-stop shop for the CFO. The platform is, as she says, intelligence ready. Think about it. Instead of companies using a bunch of different tools for finance, for GRC, for sustainability reports, they're now consolidating onto Workiva. It's a single platform for everything, which is a huge win for them.
Okay, so pillar number 2 is just plain old good execution. That massive margin expansion we saw, that wasn't luck. That was a serious, disciplined focus on spending and efficiency. Pillar 3 is that platform strategy we just mentioned. It's clearly working, pulling in those huge deals. And finally, let's talk leadership. They just hired a new chief revenue officer, Michael Pinto. This guy's a heavy hitter, coming from giants like Databricks and AWS. That's a huge move to scale up their sales game.
All right, let's pull back for a second and look at the bigger picture. Because a quarter this good doesn't just happen in a vacuum, right? There's a whole lot of context here that you absolutely need to know to understand what's going on with the stock.
Remember that activist investor we talked about? Well, their involvement basically turned up the heat on everyone. The stock was already starting to bubble up just on rumors and speculation. So management knew they had to come out and deliver a knockout quarter. And they did. This performance is basically their best defense. It's a powerful message to Wall Street saying, hey, our plan is working. So yeah, this recent rally has been great. If you look at the last 3 months, Workiva is crushing its software peers. But, and this is a big but, if you zoom out to the last year, they're still trailing the pack. So what does that tell you? It tells you one amazing quarter is awesome, but it's not enough. Now it's all about consistency. They have to keep this up. So what's the word on the street? Well, it's mostly positive. You've got analysts at places like Truist bumping up their price targets, which is a great sign. But not everyone is totally sold yet. Some are still in wait-and-see mode with a hold reading. And that activist situation, it adds a fascinating twist. It's like this potential safety net under the stock, what some people call optionality.
Okay, so with all that in mind, we land on the million-dollar question. Where do we go from here?
And you know, the best place to look for clues about the future is usually management's own forecast. Their guidance tells you exactly how confident they're feeling. And boy, did they show confidence. They didn't just meet expectations for the future. They raised them, raised guidance for the whole year, for both revenue and earnings per share. That's management basically telling the world, get ready, because this momentum isn't slowing down. So when you put it all together,
What's our call? For us, it's an outperform. You just can't ignore this combination. You've got the fundamentals hitting on all cylinders, those margins are expanding like crazy, you've got this new rockstar CRO coming in with a playbook from some of the best in the business, and then you have that activist catalyst simmering in the background. It's just a really, really compelling story right now.
Okay, let's wrap this up. If you're feeling bullish on this story, how could you actually play it? Let's talk about a trade idea. Now, this is just a pitch, but it's an interesting one. So, one idea is something called a bull call spread. The basic thesis here is you're making a bet that this great execution plus the new CRO's impact is going to keep pushing the stock up into the next earnings report. Here's how to think about it. You buy a call option, which is kind of like buying a lottery ticket for the stock to go up. But to make that ticket cheaper, you simultaneously sell another call option at a higher price. It caps your potential winnings, sure, but it also lowers your risk and cost. It's a defined risk way to capture that upside, and it fits this story of self-help plus optionality perfectly.
And as always, this is not financial advice.